Non-farm payrolls, labour market data is essentially a non-event. However, let's just go through it. The line items, which are it's the detail which is always important. The headline number of 70,000 expected actually came in at 50,000, which is just slightly less than expected. Which is actually a Goldilocks is the term we use in the professional world for data that's not too hot, not too cold, for obvious reasons. And that's exactly what the market wants right now. It wants to know that growth is okay, inflation's under control, but the rate cut narrative can continue. Now, the rate cut narrative is a bit of a tricky one because we're pricing in 2 rate cuts for this year or still, but inflation is very sticky. And if you look at the component of these numbers, which of course is average hourly earnings, that ticked up a little bit. 3.8 versus 3.6 year on year. It's not too much. It's not even worth talking about, but it's definitely not lower. So therefore, and that feeds straight into the core PCE, which of course the Fed is laser focused on. They don't care too much about the CPI, which includes fuel, food and energy. So the net today's data and the unemployment rate was 4.5 versus 4.4, so it ticked up ever so slightly. So we're just seeing a continuation so far, if the data is correct, of just a normalization, a gentle slowing down of the labour market, which is perfectly in line with the Goldilocks theme. The underemployment rate, which is U6 and not talked about too much, which is the slack in the economy, the people who could have a job but don't have one, that stayed pretty much where it was at 8.4%. And that spread between U6 and U3, which is the unemployment rate, the wider that is, the more that indicates slack in the economy, and therefore the stronger the jobs market. That contracted just a little bit, so not really much to see here. Overall, we dodged anyone who thought we were going to have a bullet today. It's been dodged so far. I'd be very surprised if the market suddenly decides that they don't like this data. So I think the market will continue doing exactly what it's been doing, which is rotating and chopping around, and we're waiting for the big earnings from the big tech guys and the hyperscalers in a couple of weeks. But underneath the hood, there's so many trading opportunities, and it's a very exciting tape actually, long and short. I've got a really active book, and obviously those of you who want to come and be part of my community, go to my bio and follow the link. Happy trading, guys.